Hello, this is Paul Scalardi, also known as Super Trades, at super_trades on Twitter. And this is a new podcast, video cast we're doing called AnswerStock. It's myself and Triforce Trader who recently became a millionaire trading stocks, which is a very exciting story in and of itself. Timothy Sykes was also going to join today, but sorry to report he has a sore throat and is not feeling well and will not be able to join us. But hey, Tim, we hope you're feeling better and we hope you recover soon, and we'll see you at the next one. The market's been interesting. I think what we've seen is the overall market, the S&P pull back here, but today it definitely showed signs of a potential reversal. Heading into the Thanksgiving time, historically has been a bullish time for stocks, in my experience. I'm sure I'm going to throw some stats at me, and I hope that backs up that claim. But traditionally, Thanksgiving week, at least in small caps and story stocks, as I like to call, potentially there's been a lot of momentum around that time. So it's important for you as a new trader, as an experienced trader, to be watching news releases, because stocks that tend to work because they have legitimate reasons tend to kind of have an over-exaggerated run around Thanksgiving week if the news is legitimate. And I'm talking about earnings winners, companies that have sustainable and impressive earnings growth, contract winners where there's a definable amount in the press release and it's something that's impressive, or really hot sectors, which, biotech stocks, if there's good news, have been still running, or we've seen a lot of earnings winners in small and mid-cap stocks if they're having the results that matter. But that's what you want to be watching for. And a lot of times companies will release news during Thanksgiving week. And really where this all started, to give you a history lesson, is back in the internet boom when internet stocks were going crazy. The week of Thanksgiving, and particularly the half day after, we saw some crazy moves in some small and mid-cap names that really had a good press release. But it seems like traders are really looking for momentum during that week. So my only point here is, be on the watch for companies with a quality or even interesting press release, because that has worked in the past in the time frame that we're heading into. Again, overall, I see the market has pulled back, but I saw today could be a sign of a reversal. I did a couple trades today. One was TIK, which, it had a great quarter. Non-GAAP EBITDA per share was 30 cents, had very impressive revenue growth. And it's a good story because the stock popped, but really it ended up closing in red, and I protected my profit and got out. And really what it ended up being is the concern with this company was their backlog had been down. And this is where my advice to traders is to get into the detail. Don't be a Twitter expert that just reads headlines, because I'm still keeping this company on my watch, because even though their backlog was down, they made it very clear in their conference call that they potentially have some really big contracts coming in from the government. They make they're an aviation manufacturer that supplies to the government. They made it very clear that they expect more growth. They expect some big contracts to come in. And so the catalyst for this company would be when they announce that they fill their backlog. They have the existing EPS. If they refill that backlog, which they said they're going to do, based on their EPS, it could be a very undervalued company. At a minimum, I'm saying I bought in at $5.65 pre-market. It hit as high as, I think, $6.40, $6.50. I never sell real quick, so I ended up getting out around $6. I made a couple $1,000s off of it. Historically, it did not hold its gains, and I knew there was a question about the backlog. Now, the facts of the story is they said they're going to replace their backlog. That's why I'm going to keep that on watch. Second company I bought today at $7 per share was NAII, ticker symbol NAII. They are the backbone and provide the nutrients and the supplements that go into a lot of GNC type products. I'm not saying they sell to GNC. I'm saying those type of, protein. I mean, Matt, you're a bodybuilder. Do you take whey protein or anything like that? They would make the ingredients that go into that. So they reported 18 cents per share. They said they had good forward comments. And if you look, many stocks in the sector like NHTC and OME have had very nice runs. The sector is strong. We have a stock under $10, had a blowout quarter, had strong forward comments. I bought in at 7. I added a little. It closed. It was as high at 760 today. But that's kind of like 2 stocks that I was into this week. That's my general thoughts on the market. And now I want to hear from Triforce Trader, who, again, is a millionaire. He's a new millionaire. He's incredibly talented. He's my first millionaire student. He's very talented and smart in his own right. He's very good not only at stocks, long and short, but also at futures, the overall sense of the market. He has a very good grasp of that. So I want to hear what he's focused on. And then you all sent in some questions for us that we're going to happily answer after that. So I'll turn it over to Triforce right now.
Okay, so interestingly enough, ITK, or what was it? ITK, right? Is the ticker?
Which one?
The one that you bought and sold this morning? ITK?
Oh, TIK.
Yeah. So that one's we've had that for like, what, a year now?
Yeah, we've been watching that, for their earnings reports since, at least a year or so. And they've been vacillating in the $4 to $5 area.
Yeah, they're still trying to fill that backlog. But yeah, that's interesting. I saw that this morning from you. I thought that was quite interesting. I was like, oh, it was an old school play. But
I stick with the old school plays as long as they're producing results.
Right, exactly. No, so overall, Paul would be right. His years of wisdom and experience with his intuition about this week going into November statistically is backed up. I would say about 70% of the time, or 15 out of the last 22 years, I believe, the week before Thanksgiving is bullish. There's not really any particular day during the week that the market overall is like extremely bullish, but the skew is definitely to the bull side. For me this morning, actually when the market opened on Sunday, I actually covered the rest of my short on the S&P 500, the E-mini. I had 20 contracts short at 2036 and then sold it after the open on Sunday. And the reason I did that is because chances are it was most likely to recoil as we entered this week. Just because there's a little bit of bad news doesn't mean that the market's just going to tank. And also the CNBC indicator, they were all doom and gloom, which means it's time to buy. So
and that's an interesting fact because many times everybody new traders, hopeful one-day stock traders, and even experienced traders will tell you unfortunately, some people just follow CNBC as, a guide. Unfortunately, for those that don't know, it's many times a contrarian indicator. And when they're pushing out all bullish commentators, the market's usually about to pull back. When it's the end of the world commentators, like Matt just said, many times that's when the market's about to bounce. And honestly, my point there, and I think Matt will agree, is if you're just trying to trade stocks and you're following CNBC and you're just reading headlines in the newspaper, just stop right now. My challenge to you would be to learn and to study and to figure out at a much deeper level what's going on, because that's what I did over 18 years. That's what Matt has done 2 to 3 years. We set aside trading to learn, and that's why we've been successful. But sorry to interrupt, Matt, but yeah, CNBC, that's hilarious. They brought out all the world is ending people, and you covered, you're successful short, but tell us why. Was it chart? Was it what's going on?
It's actually statistics. So after the October, when we talked about at the conference, I talked about it being a bear killing season and the statistics on everything that went into October. But also too, during the first couple, I would say like the first 7 days of November are very strong. And then as the weeks go on, as we head towards Thanksgiving, it gets a lot weaker. We tend to pull back statistically. And, the market hit 2110, and then it pulled back, and then it couldn't hold above 2092. It couldn't stay in that kind of acceptance area. And then once that shattered, I was looking for 2060 to hold. And when 2060 didn't hold, then I went to 2032. And then when 2032 couldn't hold, which was a key area, 2032 was the breakdown zone of the entire S&P 500, in my opinion, from Ichimoku Cloud, and on a daily chart. And so when that couldn't hold either, that's when I decided to get short and, covered it. But I was also long going up into the 2100 area. I had five.
Sorry to interrupt again, which you called at the Vegas conference. I remember distinctly. You put up, and you told me personally when we were just having lunch, the statistics showed, and I think you went back 10 years, that time period, if I believe you said if either September, October reacted a certain way, it was a high percentage bet that we're going to have a bullish move. And we did, and you caught that entire run, and you alerted your subscribers to that. And then you obviously took profit, and when your key areas of support were broken, you decided to go short as well, which teaches you, everybody out there, you can make money in the stock market, whether it goes up or down, if you put in the time and you learn and you know what you're doing. And Matt's a great example. He made money on the market going up, and then he subsequently made money when the market went down.
Yeah, exactly. And and then so as we go into December, this will be a telltale sign of what the market will do for the next year. But there's a lot of doom and gloom out there. Listen, I wrote an entire thesis on that, but it's it is coming to a head, but not like tomorrow, which everyone believes. So as far as like stocks, watching Angie's List, kind of have that on the short watch. Terrible fundamentals for a company and is moving up.
Wasn't there an offer to buy that company?
No, it's moving up because a fund actually invested like 300,000 shares into it.
Gotcha. So a hedge fund took listen, this is a company that was a hyped up IPO. Many see the commercials. It hasn't been profitable, and I don't think it's expected to be profitable. But this is an example of a company that came and did an IPO at the right time when that sector was in favor, was heavily shorted, came all the way back from, I think at one point it was in the 20s, came all the way back to the mid to low single digits, and now recently had a resurgence, I believe, because you're saying a hedge fund took a position, right?
Yeah, took a position in it. But, I'm a fundamental guy, obviously, and it's just their balance sheets are terrible. And it's one of those stocks where you either believe in like the company and not the balance sheet, or you believe in the balance sheet and not the company. So, for me, that's on short watch. It's a little bit overextended. RSI, crazy over 70. Obviously, Paul and I look at a lot of the same stuff. And, another one that I'm kind of looking at that's a little bit overextended. Actually, no. Another company I'm kind of interested in actually buying is LNG. Maybe some
as a long.
Yeah.
Okay, because I've had a bunch of people ask me about this stock recently, so I'm curious to hear your thesis.
So in my opinion, liquid natural gas is the future, and that's kind of speculative. But LNG, I think Carl Icahn just invested some money in there too, and it's trading at 40. In its prime, it was close to 100. It settled at 70. It held up pretty well against, like, you know, the downdraft, but it, you know, it fell with the overall energy market. But that's a very, Cheniere Energy is a very interesting company to, from a long position size, just because one, the whole macro perspective is destroyed, like all the energy sectors are destroyed. And number two, it's got a decent balance sheet. It's not too bad. And number three, they do something that's very interesting, which is transporting and making liquid natural gas. So
my question for you on that is, how does the low price, the depressed price, I should say, of, you know, oil affect this as a potential market for liquid natural gas? Is it moving? Has it been moving?
It's been moving down with the overall market as well as the depressed price of oil. I mean, it does more than just natural gas, but the thing is that it's an energy stock that hasn't been beaten down too badly, like energy, quote unquote, like in that kind of sector. And, you know, it's got a good balance sheet. So it's kind of.
I will say, looking at Yahoo Finance estimates, they're supposed to do 272 million this year, and if these estimates of this model is right, next year they're forecast to jump to 1.5 billion, which would obviously be phenomenal revenue growth if that comes to fruition. And they're going to have a loss of 288 this year, but that's supposed to be down to $1 next year. So if this growth and this revenue comes to fruition, and that can potentially continue into the future, that's a potential, you know, growth story that Wall Street loves, on a rapid growth like that. So, but I can see also it's been caught in the overall oil depression.
Right. I mean, it's held up in comparison to other oil companies. It's held up pretty well. It's not just an oil company, I mean, but it's in that kind of sector. But liquid natural gas, that's an interesting prospect, especially if you think about China and all of that. So,
right. Okay. That's awesome. And thanks for that, Matt. And now let's get into some questions that the viewers have sent in to us. So here's the first one. It was, I would like to hear or see about what settings you or the other millionaire students look at on their trading platform. If you do not have eTrade Pro platform, sorry about that. That's what it says. In the email, it says 2 words, platform. And I was like, I don't use eTrade, so I was like, who knows? Maybe they have a product called platform. But platform, again, I think Tim sent this email, and he was not utilizing autocorrect on this email. But anyways, what is the best tool to use to be able to look at or watch actual live trading or price actions with? And my answer is, listen, I'm an old school person. I use what works. That doesn't mean I'm about to tell you what I use for platforms. That doesn't mean it's the end all be all and there aren't any other good platforms out there. Just because it works and I've been successful, I'm a creature of habit. But I'll tell you the generalities. Like I was originally with Daytech back in the internet day, and I'm an old guy, been around a while. They were bought by Ameritrade, so I'm obviously still grandfathered in with Ameritrade, and I love and use also Interactive Brokers. Those are the only two I use, not because I've tried, and a lot of times traders will ask me, well, what about this, what about that? It's not because I went out there and tried every broker. I happen to find two that work and suit my needs. I can tell you what's important to me with a broker is a good quote screen that's not only manageable but flexible to arrange it how you want. I mean, right now I'm using Interactive Brokers for my quotes, and you can fit like a lot of symbols on one page. And then I'm looking at pretty standard stuff as far as bid ask, amount of shares on the bid ask, volume, high low, 52-week, pretty standard things. But I think what's important to me is having a screen where I can have a lot of symbols on and see the real-time quotes. As far as executions, sometimes Ameritrade can be a little slow. IB is like lightning fast. IB is great for options and shorts as well. Ameritrade is a good long broker if you're going to go long. A lot of times they won't have shorts. It's really good for options as well. I'm not sure about the pricing. IB's good on pricing, but that's what I'm looking for to really watch real-time quotes. As far as charting, I'm a fan of personally stockcharts.com. I have the pay version, real-time quotes. Doesn't mean I have no affiliation with any of these companies. I don't get any money if you go and join them. But I use what works for me. But that doesn't mean that there aren't other brokers that work. But I think really what you want is you want a good screen where you can put a lot of quotes on and see real-time quotes. And you want execution, and you want flexibility. You want to be able to go long and short. You want to be, if you're into options, you want to be able to do options. If you're into futures, where Matt is awesome as well, you want to be able to do that. So I think it's like really having software that works for you, that's functional all the time, as well as the flexibility to go long and short. Matt, what about you?
Yeah, I agree. Like I like TradeStation and Thinkorswim. Thinkorswim was my very first broker, but they started to do a lot of weird things and the platform was slow. But, you just got to find something that suits you. Like, I'm not a huge penny stock shorter, neither is Paul. And so we don't have like all these special different things that just allow us to short. Interactive Brokers is great. Most of the brokerage houses out there are really good if you're wanting just to look at, because in the question, actual live trading or price action, a lot of brokers offer you that nowadays. I personally like TradeStation, one, for commission structure, and number two, their charting platform is bar none. It's just as good as Thinkorswim, and you can also program your own kind of algorithmic systems in there if you want. And so it allows you to do that as well, which Thinkorswim does not allow you to do automated trading if you're into that. And the other part of it is, Thinkorswim, oftentimes, like even when the market corrected back in August, it was down for a while. So the platform tends to do that. But overall, you just got to find something that's...
Sorry to interrupt, Matt, but was that like what they call Black Monday when China crashed?
Yeah, a lot of people couldn't do anything.
A lot of brokers, not just TradeStation. We should also.
Thinkorswim.
I'm sorry, not only them. Like a lot of brokers were down that morning, from what I've heard. Actually, Interactive Brokers was pretty solid, but Ameritrade, Thinkorswim was down. I've heard that E-Trade and other brokers were pretty tough that day as well. Did you hear the same?
Yeah, exactly. But they. My TradeStation was fine though. So like buying, selling futures contracts. So, overall, you really just need a platform that suits you as a trader, what you want to do. And you need, a decent commission structure because you don't want to be eaten alive by that. And I have no affiliation to any of these people either. Tomorrow, if they do me the wrong way, I will.
We're mercenaries. We go with what suits us. We're mercenaries. We have no affiliation with any of these brokers or charting. And you, Matt, also for charting, you like to utilize TradeStation and Thinkorswim's platforms for your own charting and that kind of stuff. Is that correct? No, because I know you, right?
Yeah.
So you're happy with them. But again, we're not. That doesn't mean if you're a new trader that we're saying this is the end all be all. What's important is that you learn a strategy, you learn to develop trade plans, and that you have software tools that allow you to facilitate your strategy. Like Matt and I am not, I don't play a lot of penny stocks or over the counter. I don't short those. Like that's a great strategy that Tim has made millions from and made other people successful. I'm more traditionally long and short NASDAQ and New York Stock Exchange. I'll do some options. But for me, my Interactive Brokers and Ameritrade and StockCharts.com works for me. That doesn't mean we're saying that's the end all be all, but the point here is before you worry about what broker, it's like learn, figure out a strategy, Learn what you're doing, learn the stock market, learn how to research, learn how to, make a trade plan, be responsible for your own trades, and then find software that helps you to execute your strategy. And that's what you can see from both Matt and I. We found software that helps us to focus on that. Okay, next question. Let me look through these questions.
I think that would be more of a Tim question.
Well, we're gonna do like 2 or 3 from this list. So I'm trying to see which one is relevant here. We had a bunch of questions, and I'm gonna pick like 2 or 3 for today's show. Okay, what do you use outside of trading to stay motivated? We'll do 2 laser focused technical trading stuff, and we'll do what do you use outside of trading to stay motivated and laser focused on the rewards of many consistent singles over time? Example: vision boards, journaling, a physical replica, say, of a car. For me, that I don't even like this question, but I want to address it. What do I use to stay motivated and laser focused on the rewards of many consistent singles over time? Listen, that's not the mindset, okay? The mindset is, even for me, I'm an 18-year stock veteran. I learned the hard way by making all the mistakes possible, and that's the only reason I teach now, because I can help new students avoid making the bad mistakes I made, and also have them benefit from my talents, which have been proven over my career to find momentum stocks before they happen, year in, year out. And a strategy that I teach on how to find stocks that are going to move. However, even with 18 years experience and now becoming very successful, I don't need a picture of a car, and I'm not belittling this question. I don't even know what a vision board is, maybe where you write your mission statement on, journaling. I am just self-driven every day. I don't need something to motivate me. I know where I want to be. I know where I want to get, and I know what I want to keep doing. And it's not even like the money's great. I've in many times in my life, believe me, I've had money and I've had no money. Yes, and I'm not trying to go Wolf of Wall Street here. Having money is great. Being a multimillionaire is great, mostly for the financial freedom and being your own boss and being able to help family and friends. But I love the stock market. I want to succeed. I want to find stocks that are going to work. I wake up every morning with a burning desire to do that. That's why I research. That's why I teach. That's why I still do stocks. I love it. I know if I am successful and I'm correct in my research, that there are many rewards that come to that. But I don't need a picture of a fancy car. I don't need a picture of a vacation or a resort. Those stuff to me, that's ancillary. That comes with me being correct. I am self-motivated. I am self-driven. I want to be successful. I want to find stocks that work. I wake up every day like that. Personally, I don't need a picture. And that's what I would recommend to you. Like, that's instead of worrying or focusing on, do I need a picture of a car? Study stocks, learn a strategy, learn what you're doing, and that other stuff will come as a result of your hard work and if you're disciplined. Matt, what do you think?
Yeah, I understand the question. Like, sometimes in trading, like, there can lose motivation a lot in terms of, like, it is stressful. But just like Paul, I personally don't care about necessarily the money. I love the game. It's an insolvable puzzle. I am a person by nature that has always liked to solve puzzles. And the stock market is probably one of the greatest puzzles to solve because there is no quote unquote right answer. to keep myself in line, I would say, and not necessarily motivated, I do journal a lot, write down my thoughts of what I think. But I don't really care about cars or planes or vacation homes or any of that stuff. Some people need that kind of reward for them to, in their normal jobs to succeed at something. For me, and if you want to have longevity, like Paul's been in this for 15 years. Like if he just focused on the cars and stuff, he wouldn't be here anymore.
Right.
Because he loves the game. And that, if you love the game and you are good at what you do, the rewards will come, but that's all secondary. The primary thing that we both focus on really is, did I put in the effort today? Did I do the research necessary to reach those rewards? But it's not about the rewards. It's about the game itself. And, sometimes you're going to get beat up and sometimes you're going to win. And so if you and it comes down to the whole thing, like when people try to get into this for money, if you just focus on the money, you'll never be successful at trading. You have to really enjoy what you're doing. It's a labor of love, and the money will come as a result of you actually putting forth the work and the effort and doing what you love. And if you don't love stock trading, don't stock trade. If you need something to keep you motivated in this game, you're going to get burnt out so fast it will make your head spin. Right. So you really got to just get away from all of that nonsense of like the cars, the money, the girls, all of that stuff, or men if you're a successful female. And,
you're 100% right, Matt. And I think the way I also like to describe it is, listen, is the potential there for all of whatever your dreams are? For me, it was honestly to be my own boss, to not like I was in corporate finance for 15 years, and my strategy, fortunately, you don't have to be good with a computer to be successful with it, but I hated the bureaucracy of the corporate world. And I wanted, instead of using my talents to make other people rich, I dreamed of using them to make myself financially independent and being my own boss. But all those dreams, whatever they are for you, to pay off your house, to have no debt, to have that car, to be able to travel, that's very possible and feasible with the stock market. However, if you are you think this is like a get rich quick overnight, and you think that the people that have been successful in the stock market haven't put in the time and the hours and the stress and the ups and downs and really committed themselves to learning, this is not for you. This is for people that I compare it to athletes. If you want to train like an athlete, and if you want to go to practice every day, and sometimes you're going to do 2-a-days, and you're going to do repetitive things in practice like an athlete, and you're not going to whine and complain and want to just go out and put other things in front of your desire to be a professional athlete. If you want to put in the time, it's very possible. It's very achievable. There's, Matt and I we're bright guys. We both have crazy hair, but anybody out there can do what we do if they're willing to put in the time and get disciplined. So we want to stress that yes, it is obviously, we're examples. There's a lot of examples. The stock market can make you a millionaire. It can make you financially independent. But the people that get there put in training like an athlete. And if you don't have strong character, and if you're not willing to go the extra mile and make some sacrifices and do what it takes, then look, this is probably not for you. Go buy a lottery ticket. But if you want to actually study, put in time, listen, you can learn it in a lot less time than a college degree if you have the right teachers and if you're reading the right information. You can not have to spend a Harvard education to learn it, but you got to be willing to do it. And that's a key part. So I like that. Last question for today. What measure do you utilize to re-raise your standards, i.e., example, is it win percentage based? position size based, money earned per trade average based. Say upon reaching 500K, 750K, 1 million, did you begin testing larger size while simultaneously cutting down on any inefficient or high risk trades? The problem with that question is like high risk trades. I mean, first of all, like position size is something that you need to learn, because one of my biggest fatal errors when I was self-teaching myself stocks, I always had a talent to find great stocks, but I would go too big a position size in stocks and I would not take profits quick enough. And many stocks that were successful, I would give back or gains because I had too big a position size. So position size has to do with your overall account and with your trade plan. And a trade plan is, as I define it, is your entry, having a methodical entry point, which is not chasing and putting yourself at risk because a stock has already made a big move. It's a stop loss to minimize your loss if the trade does not work. And it's a profit-taking plan for if the trade does work, when you will start to take partial and then full profit. Based on that trade plan and the stop loss, which is very objective and based on very clear and precise either chart or historical price points, which I teach, that will base what my position size is, as well as that stock compared with my overall portfolio, if I am following rules, which I strongly teach and, encourage. What about you, Matt? What do you think about that question?
That question is loaded and difficult for me to kind of comprehend. But what I think they're getting at is, the scalability, I would assume, as we have more money, therefore, how do we inefficient or high risk trades, first of all, simultaneously cutting down on any inefficient or high risk trades, that is the process forever in stock trading. Things that work now may not work in the future. That's why people always get that disclaimer. But that's a huge thing. What Paul mentioned about position size, that's also a huge part of it, because I know a lot of people, for example, that will go, they're an all-in, all-out kind of trader, which means they'll buy 1,000 shares here and it goes down 10 cents and they get out because 1,000 shares is way too big for them and they sweat every tick is a cut, basically. But as far as this question goes, I'm not really sure what they're actually trying to ask.
I want to know, Matt, with the question, when I read it the first time, my instant thought and reaction was they're saying, as we made more money and our portfolios grew, did we take larger position sizes?
Oh,
that's kind of how I like to zero in and
yeah. So it's just
get right to the point. That's how I read it. As you made more money, did you take larger position sizes or portfolio percentages? I think that's how that question struck me.
Oh yeah, no, I mean, I never went up. So if you had $100,000 and you use 10%, it's going to be different than if you have $1 million and you use 10%. So, it's the same. It's holding yourself. I always look at things in percentages. So someone who makes 1,000% return on something, or 100% return, or 50% return, even if they have a small account, it's still a big deal. People often look at the actual dollar value instead of percentages. But as my money has increased, I'm having a difficult time kind of upscaling because to me, I'm still have that kind of small account mentality.
And that's a whole another stock answer. I think we should actually table that, but think about talking about, for both of us, because I obviously made this, Tim can talk about it, you can talk about what's the trend? How do you make the transition from small account mentality, which, listen, I still, even though I've been doing this 18 years, I still have, inclinations from a small account mentality that I'll have to battle or think through in my mind. And that would be a good thing to talk about. How do you transition? And for you, it's been great because it's been rapid. It's been in the last 2 years. And even now I see your trades. I see, sometimes, you're still doing successful trades, but they're, you're still making great money, tons of money, but they're conservative for what you could do at a reasonable amount in your portfolio. But I think that's a good thing that we should perhaps bring up in another AnswerStock, is transitioning from small account to large account. But this is AnswerStock. We're going to do it every week. We're going to take your questions. No hype. We're going to talk about real case stocks that are going on in the market. We're going to take your questions. We're going to answer them honestly. For me, my story's out there. I've had a lot of success. I've had a lot of failures on the way to my successes. I'll talk about the good, bad, ugly. So will Matt. So will Tim. So we'll be back here next week, and we'll see you here next week. Thank you very much.